Perfect. So welcome you all once again to today's session. Today let's look at the composition and the calculation of relevant cost. Today's concept will probably help us to make certain decisions. So to complete a short-term decision-making techniques, we need to study the relevant costs. In a short run, some of the costs are what? Irrelevant. So what are the relevant costs in a short run? Short run, what are the relevant costs? That is what we are going to look at for today. We will just explain the principle, pick one or few illustrations, and then move on to the next section. Okay, so let's see. Now, when you talk about relevant costs, as the name suggests, costs that are relevant to a particular decision. Costs that are relevant to a particular decision. So, assuming that your professional career that you embark on, what are the relevant costs? Costs that are relevant to the decision. Some of the costs are what? Irrelevant. That is it. We should know the composition of relevant costs and how to calculate the relevant cost. It's very important. It is the last section of the short-term decision-making technique. It's about the short-term decision-making technique. Good. So that is it. Now, relevant costs, as we said, the costs that probably relevant or must take into consideration if the project's been accepted. Now, I'll go straight. Relevant costs have three characteristics or features of relevant costs. If you understand the features, that is all. So let's look at the features of relevant costs. Features of relevant costs. Relevant costs. Okay, so features of relevant costs. Now, what happens is this. Costs that need to be considered in decision making in the short run, they are made up of three features. So relevant cost is a cost which is made up of one, it must be of cash flow. The first feature, it must be of what? Cash flow. So before you consider any costs in a short-term decision, make sure that this cost or result was a cash flow. Cash flow means it will be paid for. It will be paid, not incurred. Tell the examiner, not probably incurred. So here we are not interested in non-cash item. All non-cash item must be what? Ignored. So non-cash items must be ignored. Non-cash items must be ignored. Give me examples of non-cash items. Number one, depreciation, ignore. Number two, all provisions. For example, provision for bad debts, provision for depreciation, but all forms of provision, allowances, impairment, all these ones not be part of relevant cost. Why? Because they are not cash flow. Take note of that. How we get that? So relevant cost must be the one that results in what? Payment. and probably receipts, payment. So cost that we have to pay. If there's a cost that you don't need to pay, please, in making short-term decisions, do not add it to the cost of it. No, don't add it to it. Feature number 2. Let's go to feature number 2. Feature number 2. I'll take this session off. Feature number 2. Relevant costs need to be incurred in future. In future. It must be incurred in what? Future. So relevant costs must be incurred in future. It must be incurred in future, or is a cost that will be incurred in future. It is the cost, so tell the examiner that the cost that will be incurred or will be paid for in where future dates when the project is being assigned or undertaken. That is the relevant cost. Okay. Now, future, it means that all past and some costs must be ignored. That is another that all past and what? Sunk cost must be ignored. That is now ignored. What is past cost? Past and sunk cost. Oh, the cost did not come. Anyway. Now, past cost simple means cost which has already been incurred. So before probably you make a decision to join the professional body, you've made certain costs already. Probably you've upgraded yourself to get a first degree. Based on it, the professional body gave you exemption. But the issue is this: whether you join a professional body or not, those first degrees, before they apply them, it doesn't make any difference. So any cost you've incurred already, do not consider that in a new project. So let's give a critical example. You bought some material, 3 kg, and then you use just one. So that'll be 2 kg. So these 2 kgs left over, you place it there for the next project. Now the next project, when you use this 2 kg, you should not key in the cost of it. Why? Because it's irrelevant. You are not going to pay for it. The cost of the 2 kg is already incurred. It's a past cost as a result of what? Previously overbuying. You purchased in excess. So those ones in a future period, they become irrelevant because whether or not those materials are already there. Whether or not those materials, they are already there. So do not consider them as a relevant cost. Let's assume that before you started this professional program, you had some books already, either from friends or you bought them some years back. Now, when you start this professional program, because you bought the books already, the cost of the book should not be part of what? The relevant costs of your education, that's in a professional setting. Take note of that. Sunk cost. Sunk cost simple means is a cost just already been incurred in the past, and no decision can change that. So any cost that is already incurred, but no decision can change it, that is a sunk cost. No decision can change sunk cost. And such cost is what? Such cost is what? Irrelevant to the decision making. Yeah. Because nothing can change it. The calculator, you've heard about the calculator. Nothing can change it. So whether you proceed with the education or proceed with the school, calculator, you've already incurred it. You've already had the calculator, so you don't need to add it to it. That is the feature number 3. So feature number 2. Let's go to feature number 3. Please take note of this. We will need this again in investment appraisal, NPV. When I reach there, I'll not explain again. So I'll just refer you back to this particular video. When I reach there. Okay. So make sure that you get it so that when I refer, you won't come. The last one, it must be incremental or incidental. Incremental or incidental. Or directly attributable. Directly attributable. In the bracket, it must be directly attributable. So take note of that. Directly attributable. Okay, that is it. Directly attributable. Meaning that the cost must be as a result of undertaking that project. It must be directly consequent, like consequential to that of the project. Here we are saying that peak costs that come with the project, costs that are directly associated with the project, costs that are directly attributable to the project. That is a relevant cost in that particular project. How we get it? Costs that are directly what? Attributable. Take note. It means that peak costs that vary. Peak costs that what? Vary. So we have what you call variable cost. Costs that vary with the production. So normally we consider variable costs. However, fixed costs, general fixed costs, we don't consider that. We ignore general fixed costs. Now, I'll write some important notes here. Number 1, in a short-term decision making, fixed cost is irrelevant. Take note of that. In a short-term decision making, the general fixed cost is what? Irrelevant. No, we don't consider that. So in a short-term decision making, the cost that vary is the one that we take into consideration. They are the costs that probably you will not incur if this project probably should be abandoned. So in the absence of this project, certain costs will not be incurred. These are what we call incremental costs. They come with the project. They come with what? The project, the product, or the service that you want to undertake. So take note that general fixed cost must be ignored. So general fixed cost should be ignored. Should be ignored. The only fixed cost that we are interested in, we call it incremental fixed cost. Incremental what? Fixed cost. Those fixed costs, they are the ones that you incur if you probably go ahead with the project. If the project is undertaken, the fixed cost that you incur. Normally, we use the word would be incurred. It's in future. That is all. Please and please again, before a cost will be a relevant cost, make sure that all these 3 conditions are in place. Number 1, it must be cash flow. Number 2, it must be incurred in future. That means at the date when the project is being held. Then incremental, that is all. You are done. In future, another example of past costs is the feasibility studies and research costs. All these ones should not be taken into consideration. Take note of that. Now we are done. So we'll pick some few of the costs and look at their specific relevant costs. Some of the costs come with what? Specific costs. So we'll pick few of them and then illustrate with it. Few of them and do illustration with it. Just few. So take note of that. So we'll start with material, labor, and overheads. How do you determine the relevant cost of material? It's just a principle that we need to get it and then we take it from there. When we move on and pick each of the cost elements of costs and look for their relevant costs, we will start from material. So if you have a material, how do you determine the material cost? Basically, we have so many forms of materials. So we look at some basic ones. So first, relevant cost of material. Relevant cost of food material. Relevant cost of material. First of all, there are two types of material. We have the regular material and what? Irregular. Meaning that there are some materials that always you need them. Always you use them. They are so common, like every day you use them for production. So let's assume that you are seamstress. Certain material like thread and coal becomes regularly used in your operation. So such ones, how do you determine the relevant cost? Okay. So let's see. Now, in general, we have the relevant cost of material. In general, we have to use what you call the replacement cost. Unless these materials have already been purchased and will not be replaced once used. So there are two types of the material. So tell the examiner that which of the material are you talking about? Tell the examiner regular. Regular simple means we mostly use this material. We mostly use this material. And then we have materials that has been purchased, but it will not be replaced. That is once a while. They are just a specific material. You bought it for a specific order. You can't use for any other project. So how do you determine the relevant cost of it? Okay. So I'll call it one-term material. So there are basically two types of materials that you need to know their relevant cost. Your regular materials and one-term. So any project at all, some of the material, you do need them always. Some of the material too, they are specific, probably because of the design that the customer wants. You bought some special material, or you have to include special material. How do you determine the cost? At this time, all of them, we have two sections. Okay. We have situation whereby you need it installed and you have to go and then buy them. So take note of the two slots. Are the materials already in stock? Yes or no? So already in stock. Tell the examiner that this one is what? Already in stock. Meaning that it is regular. And then it is available. It is regular and it's available, like as a result of previous overbuying. And then it is regular. And then you don't have it in stock. You have to go and buy them, right? Not available in stock. Not available. So it means that you have to go and buy all. Okay. We need to go and what? Buy all. Okay. We need to go and buy all of them. So take note of this diagram. I'll try and then make it a bit okay for you. Let's just use availability. It's available, not available. So that to make the diagram look a bit okay. So available. Available. Yes. So this branch is what? Yes. This branch is what? No, it's not available. This material is not available. So what is the replacement? So what is the relevant cost? Over here, tell the examiner that the relevant cost should be the replacement cost. Replacement what? Cost. Replacement cost. Take note, once that material is what? Regular and is there, because it is available, as soon as you use it, make sure that you provide the quantity for the next order. So if that material is regular and is available, make sure that you place it back. So take note, if yes, can you use the replacement cost? What if it's no? No simple mean that we have to go and buy, right? So tell the examiner that here the relevant cost is you use what you call future market cost or market value. Future or purchase cost of the material. Future or current purchase cost of the material. Tell the examiner that if this material is regular, I need them. But here, I don't have it in stock. So use what we call future or current market value. Good, that's the relevant cost. Let's come here, one term, material. Materials that they are so special for a particular product. How do you determine the relevant cost? So that's why I call it what? One term material. That one to answer the question, availability. Is it available? Oh yes, it is available. So yes, we have some in stock. So yes, it is available. Oh no, we don't have. No, we don't have. Okay. So in short, if you have it, it comes with a very terrible calculation. So let me send that one here. Let me bring the no here. I wish I can demarcate this one down, so that I can write it, because it calls for different analysis. Okay, so if, let me put a no here rather, and yes, good. Now, if no, meaning that it is not available, that means you have to go and buy. Then you go by this approach. Relevant cost is this. Good. So therefore, I'll not worry myself again. So relevant cost of one-time material. Materials that you don't need them often. You don't often use them. Once in a while, then you add them to it. And then you don't have them available. No, they are not available currently. So you have to go and buy them. So if you are going to buy, then use the future or the current or market value. Yes, probably the date that you are going to buy, use that date towards value if you can determine that. What if this material is one term, but some is available as a result of what? Overbuying. Previously overbuying. So we have a lot of them. Now the standard is saying that, in fact, we are saying that compare two values and select the higher. Compare two values and then select one of them in there. Okay, let's see. We compare two values. And then you do select the higher. So what are the two values that you go to compare? So let's see if these materials have other alternatives. So compare it to the alternative use, or let's say value in use. Here, select the higher. Select the higher. This material, you have previously acquired them, and you cannot use it for any other. Okay, let's see. If you put it to alternative use, what is the value? Put it at one side and please relax for a while and come back again. Tell us, what will be the scrap value or the net disposal value, or let's call it net realizable value, NRV. If you sell this material to someone else, how much will you get? Please select the higher. So compare this. So let's assume that here is 500 Ghana cedis, and here is what? Just 1,005. Oh, then I will sell it, because as I say, I'm getting 1,005. Okay. Because I am using it in this product or this project, if I should sell it, I'll get 1,005. If I should use it to do a different artifact, a different product and sell it, that's alternative use. Put it to alternative use. The value that you are going to derive or generate, if you put it into alternative use, maybe it's 500 Ghana. If you sell it right now, it's 1,005. So therefore, what do? Well, a rational company will sell, right? That is 1,005. So therefore, the relevant cost of this material will be what? 1,005. Even though you're not going to sell, please understand the fact, you are not going to sell. This material is there, but you have to use it in today's project. You are going to use this material. Just that it was as a result of previously overbuying. So you want to know the relevant cost. So the relevant cost here is just the opportunity cost. Sacrifice forgone. All this, we call it what? Third examiner, opportunity cost. You could have disposed this one-off material by what? For 1,500 cedis or dollars. But you are now going to use it to produce this project or this product. So as a result of this, you have to sacrifice this 1,005 revenue. So that's why we are using the opportunity cost as what? The relevant cost. So tell the examiner that anytime you have one term material and you want to look at the relevant cost of it, and you don't need it often, but you already have it there. Tell the examiner that the relevant cost is equal to the opportunity cost. Opportunity cost of using this. That is all. We are done with material. So this will be the relevant cost. Now I have a nice question in here that we are going to look at for. So as usual, I'll project the question and then you do justice for me. Okay, so let's see this illustration. After this, then I'll explain labor overhead and then we run away. Okay, so let's see. Required. What are the relevant cost of material in deciding whether or not to accept the contract? Let's see. The manual code has been approved by a customer who would like a special job to be done for him, and who is willing to pay 22,000 cedis for it. The job will require the following materials. So total material requirement. These are the material that we need. So material A, total unit required. We need 1,000, we need 1,000, we need 1,000, and we need 200. Units already in inventory. So those that we don't have inventory, the third examiner. What we have to use. Okay, so that means for material A, we don't even have single one in inventory. We don't have single ones. You have to go and buy all of them, right? We are going to buy all of them. Okay. Material B. Already there. Now you have to tell us the information about this material. So they will pass a note to describe the material for you so that you will know whether it is what? Regular, one term, some is available, some is not there, or you can get the alternative use, or you can even get the NLV. So they'll start telling you all these materials. So for material A, don't expect them to tell you anything because for material A, the value is that that's the value. They didn't give it to us. They didn't tell us anything, but they gave us what replacement cost. We have to use replacement cost. So that means material A is a regular, which needs to be replaced. So we use the 6. Okay. So this is how the solution should be when you start the work. Now the examiner, I'm calculating relevant cost of material. So relevant cost of what? Materials. First, material what? A. Ghana cedi. They need 1,000. And all the 1,000 need to be what? Purchased at 6 Ghana cedis. So that will be 6,000 cedis. Agreed. Why 6,000 cedis? 6,000 cedis because the relevant cost happen to be 6 cedis per unit, and you need 1,000. So I just have to multiply it and then move on. You do it material by material. Don't jump. So let's go to material B. They need 1,000, but they do have 600 in units. Wow. So that means there are 2 things involved. They should tell us What type of material is this? They say material B is used regularly by Manuel Limited, and if units of B are required for this job, they will need to be replaced to meet other production demand. Wow. That means anyone that we pick, we need to replace them, right? So any that we pick, it must be replaced. So what is the relevant cost of this? Let's go to the board. Although we need 1,000 and we have 600 there, what will be? It means that even we need to go and buy 1,000, or if we pick this 600, we have to make sure that we buy 1,000 so that we add 400 to whatever we need, and now we will have 600 as the surplus. So let's go to the board. Let's go to the board. So now, before that, let's pick the relevant cost per unit. What is the relevant cost per unit? It's 5, right? Replacement cost per unit is 5. So that means I have to buy the entire 1,000 units at all at 5. That is all. I have to buy the entire 1,000 units because I need to replace them. So each one that I use needs to be replaced. So I have to. Let's go to the board. Now it becomes what? Material B2 will be 1,000 times 5 cities, and that will be 5,000. Okay. So let's take it again. For material B, it is a regularly used material. Those ones, it must be replaced. It must be what? Replaced. So those ones need to be replaced. So we have to use replacement cost. Replacement cost. Because we need to replace these materials. 600 need to be in stock for the next consignment. That is it. So the entire 1,000 units, we have to value them at what? 6 Ghana cedis per unit. That is it. 6 Ghana cedis per unit. Because it is what? Frequent or regularly used. That is it. Now let's go to material C. Is it material C and D are in inventory as a result of what? Previous overbuying. They have a restricted use. So that means you don't use them regularly. The usage is what? Restricted to a particular order. So it's like you acquire certain flavor for some special order. So that one is what? The usage is what? Restricted. As soon as the examiner inform me that usage is restricted, check whether we can get an alternative use. Now, no other use could be found for material C. So material C, we don't have any other use. Any other use. But here, let us be a bit careful. We need 1,000 units. But because we previously buy more, we had 700 in there. So it means that we have to go and buy what? Additional 300. That is all. So that 300, in fact, here we need what we call market value. It is rather unfortunate that this question don't have market value. We have selected the market value. Now take note that the valuation must go with what? The 700, not the entire 1,000. You need 1,000 units, you have 700 there. It is the 700 that you have to now consider two items. The higher of what? The value in use. If you should put this 700 units into alternative products, what will be the value are you going to derive? Second, if you should sell this 700, what's the value? Another one is here, 2.5. NRV is 2.5. Great. So if the NRV is 2.5, then we can multiply 700 by what? 2.5, and that becomes the relevant cost by the 700. So that 700 units, its relevant cost is what? By the 2.5 by 700. Okay. Okay, the sound kindly confirm for me if the sound is a bit okay. It's okay. Right. And I hope you are getting it too, right? I hope you are getting it too. In fact, relevant cost is not something that is too difficult, but it's not too easy to. Yes, because the question, I will let you take a screenshot of those ones, those questions, and then let's continue. So in short, just tell the examiner, look, we need 1,000 units. We already have 700 there. This is irregular material or one time. There's a restriction in the usage. So what happened is we need to those that we have, this 700, we cannot put it into any alternative use. That's here. No other use will be found for material C. Don't forget that we said that any material which have a restriction in the use or which have a restricted use, then it means that we need to compare two items. That examiner, compare material that have restrictions in the use. That examiner that you need two items. The value in use when they put it to alternative use. So if it's like a fabric, maybe you have some cloth there. This cloth, it was for a special order and nobody wanted it. Let's say Ghana at 10 cloth, we don't have it there today. Nobody wants it. So can you put it to alternative use? Maybe use it to sew a pillow. Yes. Maybe a new design. So what's the value in use? So value in use, if you put it to alternative use. Compare that one to that of your NRV, meaning that you will sell this material in its raw state. Sell it to someone and then compare and select the highest one. That is all. So you check material C very well. Material C, we need 1,000, but we already have 700 in inventory, and this have a restricted use. So therefore, this 700, we have to compare what the value used and what that of the NRV. Whilst the 3 have to be acquired, the 300 have to go and buy it. How we get it? 300 need to be acquired at the current market value. Current market value. That examiner. Yes. at the current market value. So in short, this 700 determine the value in use and the NRV. So value in use. Let's go and NRV. So let's go and pick this one from the question. Where are you? 700. Book value is here. We don't need book value. Net realizable value is here 2.5. So therefore, this 700 will be 2.5. So this is 2.5. NRV is 2.5. But we were told that you don't have, we can't put it to alternative use, right? So value in use is 0. Comparing this is where the highest one is 2.5. So therefore, when I come to material C, I'll tell the examiner that 700 need to be valued at what? 2.5. Then let me that much. If we need 1,000 and already we value 700, then let it 300, right? The 300 we have to use what we call current market value. That I don't have current market value here. This is book value. This is net reserve value. And this is replacement cost. So we cannot use any of this. So let's the best one or the next one is the replacement cost. Let's use the replacement cost of 4. So let's go. So in short, let me do 12 here. When you record C, let the examiner that the C, open a bracket, 700 by 2.5. So now plus the remainder 300 by what? 4. This is 1,002. This is what? 1,004. 1,350. And then you put your answer in. Please, what do you get if you do the calculation? So that should give us 2950. Great. Find online. I need a solution. So that is the answer. So let's move on with the game. Now let's move on to that of the last one, material D. Like material D. Watch carefully. We need 200, we have 200 there. Should you go and buy something outside? No, we're not going to buy anything outside. Whatever we need is in, and this one is just one off. So if we don't use it in this project, it will not have any value. So promise you have to use it. So what will be the relevant cost of this? I think there's okay. Okay. I can see 18,700. Okay, let's see. Now for material D, something, but a unit of material D could be used in another job as a substitute for 300 units of material E, which currently costs 5 Ghana cedi per unit, of which the company has no unit in inventory at the moment. So all what I'm saying is this: the alternative use for these materials, the material D, which is 200, It means that they can put it to alternative use and then generate 300 units of a certain product core or a certain material, that is material E. So it means that the value that they can generate from this 200 is multiplied by 300 by 5, and that should give us 1,005. You compare this figure, the value in use, compare that one to that of realizable value, which is 6, so 200 by 6, which is 1,002. Okay, so for material D, we just have to compare two items, the value in use and then the NRV, and select the higher. So higher. Value in use, the examiner said probably this material could be put to alternative use to produce 300 units of material E. So 300 units of material E. So 300 at a value of what? 5 cedi. So that would probably give us 1,500 Ghana cedis. But the NRV, the realizable value is what? 6 cedis. But this material, they have 200 in inventory times what? 6 Ghana cedi, and that will give us 1,200. So comparing this, a rational company, which one are you going to select? Probably the higher. Yes, because of the value that the value you want to derive. So you pick the higher, and that is 1,500. So therefore, the relevant cost for material D is what? 1,500 because of the 300 by what? By 5. So let's go and put this in our calculation. So material D will be into brackets 300 by 5, and that will give us 1,500. Putting all this together, this becomes the total relevant cost for material. Okay. Let me just explain why we use 5 in here and even 300. If we take the material D, it is a material that they don't use it often, right? That is, it is what? Irregular, or it has a restricted use. There's a restricted use or restrictions in terms of the usage. So in such material, compare the relevant cost is nothing by the higher of two values, the value in use and that of the NRV. So value in use versus NRV. In this question, we're told that they could use this material to produce a certain product called E, and they can produce 300 at what? At 5 cedi. So that is the value in use. So 300 at 5. Good. Let's look for the NRV. The net reserve value is 6 cedis. The unit that they have in inventory for material D is 200. So 200 by what? 6 cedis. Now, these two answers, which of them will give us the highest value? This is 1,005, right? And this is 1,002. And we said that for material, if we don't use it often and we have it as a result of previously overbuying, then it means that we have to select the higher of value in use and NRV. So 1,005 and 1,000, which one is the higher? So we selected 1,005. So that's why we picked the 1,005, because it's giving us the highest value. So that is that. So in short, we have 15,450. That is the relevant cost. Now let me explain labor. Then I will start scanning through the terrible questions. Relevant cost of what? Labor. Relevant cost of labor. And I'll start scanning through the terrible questions one after the other. So let's go to relevant cost of what? Labor. Relevant cost of labor. Now, when we move on or talk about relevant cost of labor, here labor costs are paid irrespective of the decision, right? Because they're on your payroll. Whether you assign them to this job, they'll probably take their money. However, the relevant costs are therefore the incremental costs that we have to incur. The normal costs that you have to pay them, irrespective of the decision, that one, it is not incremental and hence it is not what? Relevant. Good. We are saying that the relevant costs okay. Okay, so someone asked a question that what is the value used and then the NRV are the same. You select one. You can select any of them. Yes, if they are the same, select any of them. Okay. Relevant cost of labor. No, labor. Labor, most often, their costs, irrespective of the projects, they need to be paid. Usually, they're on the company's payroll. And for that matter, those costs are what? Irrelevant because they are not incremental. If labor need to be paid irrespective of this project, then that amount given to that labor is what? Irrelevant. The guy is taking a monthly salary of 4,500 cedis as the basic. Whether we assign the guy or not, 4,000 must be paid to the guy. So it means that this 4,000 becomes what? Irrelevant to our decision now because it is what? It is not incremental. It's not as if the project that we are assigning the guy to, we are assigning 4,500 to. No, this 4,500 is for the guy being with us. The guy being with us costs for 4,500. Good. Then the question is, if this amount is irrelevant to the decision, then what is the cost or labor cost relevant to the decision or the short-term decision making? Now, if the labor force could be put to an alternative use, in such case, the relevant cost becomes what? The variable cost of the labor plus the variable overheads, that is the contribution forgone from not being put into what? Alternative use. So let me explain this. Now we are saying that this guy, he takes 4,500. Whether you assign to this project or not, he's taking the 4,500. And in that, this 4,500 becomes irrelevant to us because whether we assign the guy to this new project the guy will still take his 4,005. If you don't assign him, he still take his 4,005. Such cost is what? Irrelevant. Let us examine. Someone should tell the examiner that this is what? Irrelevant. Then the question is, then the examiner will ask you, okay, if this is relevant, now tell me the relevant cost of what? Labor. Relevant cost of what? Labor. Now the relevant cost of labor is like this. However, if this guy is taking 4,500, he's busy with working for the company. It's normal duty, normal what? Duty. If we assign him to the project, he will miss his normal duty. Take note, though, this guy is busy working on the normal work. He's busy here. When we move him to the new project, can we get a replacement? That's the first question. What if we cannot get a replacement? What if this guy is busy? As soon as we move him, all the contribution that we are getting here, we need to sacrifice it. We feel like the new project is so important than the current work that the guy is doing. So you should stop the current work and come and then be on the new project. So being on the new project means that the guy has to sacrifice the alternative use, or the guy has to stop working with a company and any contribution forgone. In such case, labor cost is nothing by, or the relevant cost for labor is equal to the variable cost, how much the guy will charge you per hour. The guy's charge, because now he's going to work with you, is what? Causing the normal duty. He will stop the normal duty and come and be on the new project and then cater for the project. So the relevant cost will be first, his salary on the new project. Have you seen? His rate per hour on the new project. How much the guy will take us on what? The new project. Plus the variable cost, plus any contribution forgone, because the guy was busy working here. Except for if the guy is in what? Idle. He wasn't working. Then we assign him. So that one, no what? Contribution forgone. So that contribution forgone is 0. But where the guy is busy working, and when he stop his work, we cannot replace him. We can't get replacement. So when we stop the work, we will lose contribution of, let's say, 30 Ghana. Then the variable cost will be, sorry, the relevant cost will be the variable cost plus what? The contribution forgone. That is the opportunity cost. So labor, that is a relevant cost for labor. And take note of it. So I hope you got it very well. Now let's make an illustration. So as usual, our project let's look at this one before we move on to the other ones. The other ones are so easy. The challenging ones are labor and material. So take note. The rest, they are very easy. So simple. Okay. So now let's look at this. Let's look at example 1. Example 1. Let's look at example 1. Let's look at example one. Example one is on the peg to okay, so example one, let's start the game. Example one. Suppose that a special job will require 50 hours of labor time. The job needs how many hours? 50. Employees are paid 10 cents per hour. There is sufficient idle capacity among the workforce for 40 hours. Idle. Idle simple means the guy is not busy at the normal work, maybe lunchtime, free time, spare time. So that means if I move anyone from idle time to come and work on special projects, we don't need to incur, we've not incurred any relevant cost because the guy will be paid here. Okay, so that is it. But where situations where the guy does not have a spare capacity and I move him, I will incur opportunity cost. Good. So let's see the game. The extra 10 hours would be worked in overtime, for which additional pay is what? 12.5 per hour. That means, in short, this project required 50 hours. The guy have idle time of what? 40 hours. So that means we need what? An additional working hours of what? 10. And they say we have to use that, using what? Overtime. If I multiply this one by the overtime rate of 12.5, I'll get the relevant cost. So therefore, in this is the relevant cost. The 40 hours becomes what? Irrelevant, because such time the labor will be paid. The labor will be paid. Such time the labor what? Will be paid. That is it. Now, although 50 hours required for this work, 40 hours will be paid anyway, because like we paid the normal work or as a committed cost, because if you employ the person's on your payroll. So once, whether it's 90 time or not, you pay the person. Good. So that is it. Example 2. Suppose that another special job requires 20 hours of skilled labor. The skilled workforce is paid 15 per hour and is working at full capacity. As an examiner said full capacity, tell the examiner that if it is full capacity, if I move them, then that means I will incur what you call 1, opportunity cost, 2, variable cost. So when I go, I have to pay them there. Good. If the special job is undertaken, the skilled labor will be taken off. Will be taken off another work. They were busy doing another work, but because they are full capacity, because we can't get a replacement, or because they are operating at full capacity, we have to take them from that work. We don't have any spare person to come and then perform this task or the new project. Okay. So the skilled labor would be taken off other work that earns contribution of what? 12 cedis per hour. That's what contribution for one. After deducting cost of labor and variable overheads of 1.5 per hour. Good. In this situation, I think there was an opportunity. In this situation, relevant cost of labor must include what? The variable cost of labor plus associated variable overhead That's the entire variable cost together is the variable cost plus what? The contribution foregone. So let's calculate the relevant cost for this particular one. So here we have to take someone from his job. So let's go to the board. Start the examiner. Right? The relevant cost of labor, relevant cost of this labor should be number one. We have what we call, when you mention variable cost of labor, it includes the variable cost and the variable overheads. So there's a variable cost of, we need 20 hours, right? And each hour, we know that it's 15 cities, so 15 cities. That's a variable, making what? So 300. Again, we also have what we call variable overhead of 1.5, right? 20 hours times 1.5. And that's to give us, please. That's to give us 30, right? Yeah. Then finally, contribution foregone plus the contribution what? Foregone. That one will be, let's go and pick contribution foregone. There's not something though. It says that and a contribution of 12 cities per hour, right? Okay, so 12 cities per hour. So how many hours are we taking? So 20 hours times 12, right? So that would be 24. So that would be 240, right? So therefore, relevant cost will be 570. That would be the relevant cost of the labor, 570. That is how we will calculate the relevant cost, 570. Perfect. We are now with relevant cost of labor. Material labor is the stubborn guy. The rest, don't need to worry about it. Let's go to machine and overhead. Machine. Relevant cost of what? Machine. And relevant cost of overhead. We have it for all of the items like R&D, research. So relevant costs. We have it for R&D, research, and the overheads. So let's move on. To the relevant cost of what? Overheads, R&D, and then machines. So going back, gone. Okay. Now let's clear machine from the way. Relevant cost of machine. Because some of the projects, you need machine to run it, right? Good. You need machine. Very wonderful. Need machine. Now, this machine, if you have it already, take note that two things: either it is available, yes, it is there. No, you have to buy it. If it is yes, that means you bought this some years ago, right? You already bought it some years ago. The relevant cost becomes what? 0. Take note, relevant cost 0. If no, relevant cost becomes what? The purchase what? Price or the market value of it. However, because this machine is in existence, the purchase cost itself, maybe they bought it 3 years ago or a month ago, relevant cost becomes what? 0 because it's a past cost. We don't include any past cost. Second, The only relevant cost of machine that you've already incurred or you've already acquired is the maintenance. So here the only relevant cost is equal to future maintenance. Let me add F to it. Future what? Maintenance cost or future repairs. That is the relevant cost. The cost that you are going to probably incur to maintain this existing machine. That is the only relevant cost that we have. Another irrelevant cost, depreciation. Ignore depreciation because one, it is non-cash item. Don't include depreciation of machines. Even if it is straight line, reducing balance, forget about the examiner. Okay. Then we go to overheads. Gather with what? Machine. With machine, check whether they've acquired it already or yet to be acquired. If they've acquired already, the purchase cost, the relevant cost is what? Zero. They're not interested in the purchase cost. However, any maintenance cost that we need to probably incur to keep the machine in a good condition, that becomes a relevant cost. And I have a very nice illustration question on this for you, so don't worry much about it. Very nice one here. Very nice one. Good. Okay, so now let's look at this particular question, and you will like it. But I like it, and then you have to also like it. I promise you that of overhead, all the remaining ones, put what you call, select the future cash flows that you incur. So overhead, future cash flow. R&D, future cash flow. Not previously incurred research cost. No, it should not be part. Then again, loans, finance costs or interest costs, all of them will pick a question on that. So now let's look at this particular question. Now I am done with relevant costs. So from now till we are done, or now to probably few minutes, just look at these terrible questions. First one is in here. Okay, so now let's look at this particular question. Very interesting question. Awako Limited. Let's go straight to the requirement. Compute the relevant cost in respect of the contract offered by Adamu Limited and explain the basis of your answers. Normally, the answers must be explained. For instance, something like this. So a question like this. The first one that we solved, you need to explain material A, material B, material C, your basis. After doing the calculation, coming up with the explanation. Why selected this? Okay, let's go to Awako. Let's start. You are saying that Awako Limited is a company that manufactures machine parts. Adamu Limited has offered them a year contract to produce a special type of part for one of its machines. Awako Limited has existing machine. What does that mention existing machine? The cost of that existing machine becomes what? Irrelevant to. The only relevant one becomes the maintenance or repairs. Good. And now that must be cash. No depreciation. Okay. Awako Limited has an existing machine that was purchased about 10 years ago. That cost is irrelevant. And it can only be used for the contract offered by Adamu. That's good. The machine has so far been depreciated by 10,000. We don't need those taxes. Don't forget that in management accounting, overflow information is what allowed. Just a matter of you selecting the best one to solve the question. That's why you have to do the requirement first. Meanwhile, its original cost was 24,000, irrelevant. The value of the machine in the books of our co limited is what? 14,000, still irrelevant. However, it could be sold for now 7,000, or in a year's time for what? 1,000. Okay. So now if it is in, then the relevant cost becomes the higher of the value that you are going to derive in it. The higher of what? The value. So relevant cost becomes what? The 7,006. So this machine relevant cost becomes 70. Here there's no maintenance. There's no maintenance cost that we can use maintenance. However, it could be sold for now 7,000. Or in a year's time for what? 1,000. So relevant cost the higher of what? These two. Yes, these two values. So machine relevant cost is what? 7,000. Yes. Now the examiner said produce explanation, right? That's a good thing. So you just copy all the relevant one and tell them that they are irrelevant, and then give a reason. Depreciation is from cash. And then this 24,000 is a what? Past cost. This 14,000 is not incremental. That is also the only incremental one is what? 7,000. And you provide this explanation to end the format. Let's move on. If our co-limited accept the contract, it will need 4 different types of what? Materials, which are listed below. So materials A, B, C, and then D. In stock, units that they have in stock: 1,004, 400, 2,800, and 2,000. Required for contracts. So what they need 500, right? But here they have 1,004. So should I have to go and buy extra? No, you don't need to buy single. Okay. Here they have B, 400, but they need 1,300. Okay. But this one need 400. They have what? 2,800, and then D to the same thing. We have what's called purchase price of the stock, current replacement cost, and then the notes. A and D are in regular use within the company. When you see regular use, what's the cost? It means that you need to replace them after the acquisition. And then material B could be sold for 2.1 if not used for the contract. And there are no other use for C, which has been deemed to be what? Obsolete. So C is off for the game. What about D? So C, A, and D are regular. So what about B? B could be sold. So B. Okay, that's fine. So what is the relevant cost? Compute the relevant cost. So go to the board. I think you do have the. So tell the examiner that you are computing what relevant cost of this order. Relevant cost. This is how all the solution to be like. Do your calculation like this. You start with the machine. Then you put it down, 7,000, right? When are they going to supply this order? Is it this year or next year? If this year, then we pick the 7,000. Next year, they have to pick the 1,000 there. Good. So when are they going to supply 7,000 or 1,000? If now they're going to supply the goods or the parts now, you have to pick the 7,000 afterwards. If like a year's time, then you have to pick what? The 1,000. However, we have to establish the point whether this contract will be undertaken or signed this year or next year, because if they are signing the contract now, the relevant cost for machine be what? 7,000. If they are signing the contract 1 year from now, and relevant cost becomes what? 1,000. So we have to confirm that. So first online. Now they are saying this. Awako Limited is a company that manufactures machine parts. Ademu has offered them a year contract to produce. A year. So that this suggests that they are going to supply this in a year time or now. Okay. So let me have your view. Okay, now let's go to the board and let's do something here. Now, I want to do something here. In fact, the issue is that it will be now. The project is now, because how can you determine the cost of a project 1 year ahead of time? It's when they've made the order before you now go into it and then do a rough estimate and determine the relevant cost and prepare the bill. So right after the relevant cost, you prepare the bill. So in short, we are doing it what? Now. Even though the project is a 1 year contract, it does not mean that we should start 1 year's time. How do you get it? That's the second. Then it means that for now, we can only get 7,000, right? Can get 7,000, right? Okay. Now, there's something here. If we are using it now at 7,000, in a year's time, we can sell it for how much? 1,000. Okay. So therefore, can I inform you that the relevant cost here is 6,000? Yes, the relevant cost in here will be what? 6,000. Yes. Why? The reason is this. We are having, or we can sell this for 7,000 in now. But you are going to use it, right? Okay. And then, but in a year's time, we can sell it for how much? 1,000. So now we are losing what? 7,000, right? For now, because if we don't sell it and we use it, that means we are going to sacrifice this 7,000 now. Agreed. Understand that point, right? Okay. We are saying that if we should sell this machine today, we sell for 7,000. But because we are going to use it to for this project or this new project, we will not sell it, right? So this one becomes a cost to us. We call it contribution or forgone, sacrifice forgone. So it's what? A cost. But however, we can sell this after 1 year. How long will this project last? This contract is 1 year. So after 1 year, I hope you can sell it, right? You can sell for how much? 1,000. Good. So out of these 7,000, how much? 6,000 is the actual contribution that we will lose, because even if we use it, at the end of the day, we can still get what? We can still get 1,000 from it. So in actual sense, the relevant cost is what? 6,000. That is this. So third examiner, that relevant cost is nothing by 7,000 minus 6,000. We said that this particular topic is a very interesting section. So that's it. The notes, put 3 notes, all the figures. The 10,000 given you depreciation relevant, the 24,000 cost irrelevant, 14,000 Irrelevant. So tell them all these ones are irrelevant. I hope you get it. Now let's move on to the material. So the material, let's go by one after the other. Let's start with material A. So for materials, material A. So we start like this. Material A. What is the relevant cost? Let's go. For material A, what is the relevant cost? Material A, we need 500, but we have what? 1,400. Okay. And then we have the purchase price and we have the current replacement cost. Do you have to buy? You have to replace them, right? Good. You have to replace them because this one is what? Regular. They say A and B are what? Are in regular use. Perfect. They are in regular use. So situation where they are not there, they are not available. You have to buy using what? The current market price. Using the current market price. If it is regular and you are buying, and then it needs to replace the replacement cost. How do you get it? If you are buying it's regular and it must be replaced, use what you call replacement cost. Let's go to the board. So in short, the relevant cost will be let's go and pick the figure. So the right will. Replacement cost 1.5 by what? 500, right? That is all. So tell us now. So material A will be 500 times what? 1.5. Because it must be replaced after use. That's the explanation. And that will give us what? 757. Okay, let's continue again. And again, it's getting what? Interesting. Let's see. Okay, so material B. Here we need 1,003. We already have 400 there. But the same material B could be sold for 2.1. A and D are regular. That means the rest are not regular. How we get it? That means B and C are not in regular. That means they are like restricted. They have restricted use. And those ones, the one that they have restricted use, don't forget that we compare what? We do like this. You compare value in use versus what? The NRV. And then you do what? You select the higher. Good. You select the higher. Those that have the restricted use. That is how we calculate them. So can we take notes of this? Now, here we have to be a bit careful because material B, we have it in two folds. For instance, we need 1,003. We already have 400 there. So that means we should go and buy 900. Average. Yes, we need to go and buy 900. And then left with 400, right? Good. The 400, what are you going to use it for? The 400 you compare. That's where you compare the NRV versus what? The value in use. Yeah, they didn't give us what value in use, so therefore you select the NRV like that. No value in use. If they don't tell you the alternative use, pick the NRV as what? The relevant cost. So therefore, this 400 will go by what? 2.1 average. Yes, the 400 will go by 2.1 because the 400 is already in stock. And we need 1,003. So you have to go and buy additional what? 900. Okay. Additional 900. The 900. So if we are buying, then it means that 900 have to be acquired at what? The purchase price of 0.75 man. However, if material B is regular, then we have to use what? The 2.8 replacement cost. If it's not regular and just one time, something that you don't need it often, then what do? Use the purchase on, and then that is all. So take note of this. If material B needs to be replaced, kindly use the 2.8. If material B need not to be replaced, then use what? 0.575. Now, a good examiner should probably inform us the state of the material, because you don't know the features of material B. You're not there with them, right? As someone said in the court that, my Lord, you and I were not there. So the same thing, this material, when they are buying it, we are not there to know the features. So the note over here should tell us. But I said that material B could be sold for 2.1 if not used for the contracts. Okay. And there are no other uses for material C. Okay, material C. So material B, then you can probably assume that it must be replaced, then we use 2.8. If you assume that it don't need to be replaced, then use what? 0.75. Any of them, you are free to go. It's a correct answer. Okay. So let's select the best one and then move on. So first, material B. Material B. There are two in number. First, the 400 that we have there, we use 2.1, right? And that will give us something like 840. So 840. And then the 900 that need to be acquired. If we are not going to replace it, we have to use this. If it is irregular or if it needs to be replaced, even if it is irregular and need to be replaced, and use the replacement cost of 2.8. How do you get it? So in this question, because that statement was not too clear, you can also use the 2.8 to mark correct. How do you get it? Good. Don't forget that in the first question that we solved, the current purchase price was not in. So we use the, how do you call it? The replacement cost throughout. With the replacement cost throughout. Okay. Okay, so please, what do you get if you do the computation? So 675. And then if you use the 2.82, you'll get, so for those who use that one, 2520. Perfect. 2520. So that's the answer. Let's move on to the next material. The next material. Additional relevant cost questions is so interesting. The next material is C, right? They say there are no other uses for C which has been deemed to be what? Obsolete. So that meaning it's valueless. So what will be the, and you can also sell it then. No NRV, material C They have 2,400 there, right? And we need 400. So what will be the relevant cost? So which one will be the relevant cost? What will be the relevant cost? Yes, material C. But 0.8, and then purchase price of the stock is 0.5. You're going to buy it. Yeah, you're going to buy it. No, we will not buy material C because we have more than we just pay 400. Good. This 400, I said there are no other uses for material C. If there are no other uses, then unless we use the NRV, the NRV wasn't given, so that means they can also sell it. So take note, if the NRV is given, can you use the NRV? In such question, I don't know wanted to use the NRV. So you have to tell us the NRV, the current sale price of this material. At least any material at all, probably you should have some scrap value. Even others, can we sell it? Yes. So some of the materials, if you don't put it to any alternative use, or it does not have any alternative use, ideally they must give us what? A selling price or NRV. So take notes, but this question you don't have it. So therefore, relevant cost becomes what? Becomes 0. So there examiner, since we cannot put this material alternative use, we cannot also sell it. It does not have any value. So it becomes 0. So material C, 0. Although I can tell for fact that the examiner wanted to bring the NRV in. So check if this question repeats again, there will be NRV inside. So take note of that. So material C is what? 0. Then give a reason. Why 0? Have to give us a current resale price. That is all. Okay, let's go to the last one. Then we are done for it. The rest is question solving. I'll just be reading those questions to you. I might not be able to solve them due to our time. You have to try them for me. D is regular, right? Matter D is regular. And all the regular ones we use what? Replacement cost. That means you need to replace them. And yet there are 2,000 in here, right? And we have 1,004. So we need to replace that of the 1,000 for the entire 1,004 need to be what? Replaced. So that would be what? 2, right? So 1,004 by 2. Replacement cost is 2. Yeah. Yes, so that means we use 1,004. It's what we need. And that is what we are using now. And that 1,004 needs to be replaced. So you have to replace the 1,004. So you have to use the 1,004 because that is a requirement. If you use 2,000, it means that this project needs 2,000. No, we don't need 2,000. That means they have more than requirement. That's good news. So for material D, that is the material D, that will be material D will be D, third examiner, it will be 1,400 times QCD. And that will be something like 2,800. So putting all together, that is the relevant cost we are done. Okay. Great. Okay, the total is 11065. Perfect. So 11065. 11065. Perfect. So put it in as 11065. My body says, let's check. There's something like 11065. You put all together. Okay. That is relevant cost. Okay, now let's come to this question whilst you take probably a screenshot of it. Let's see this particular question. Let's go to the requirement. It's very lengthy. Compute the relevant cost of the job and really justify each of the figures you state any assumptions. Wow. So that means state the assumption clear, like the previous one that we solved, where we assume that we are going to pick the other. Exactly. So take notes of that. We are aware that this is not straightforward. So I just come to another solve. Don't solve it. But to submit it, a car repair company has been invited to enter for a big job, which is outside its regular activity. And since there is surplus capacity, the executives are keen to put a low price as possible. A low price will not have any negative impact on Microsoft Limited's regular work. So that means the unlisted cost estimated has been prepared on basis of the study made by the estimating department. Material and components. 4,000 units of up at 25 days. So they had 100,000 there. It means that they have already prepared the cost over here. So some of the costs you will not agree. You may assume them as irrelevant based on the explanation. Good. 400 units of material alpha, 4,000 units of alpha, 400 units of beta. Other material are going to be probably all of them are in there. Direct labor, 1,400 hours of skilled labor, and then 1,700 hours of unskilled labor. Great. Okay, so that labor, 1,400 skilled at 3.5 series, the value is there. 1,700 unskilled at 2, the value is there. Okay. Overhead, Department A, Department B, all of them is there. My interest is the footnote. You have to base on it to change things. Material alpha, this is a regular stock item. The stock holding is more than sufficient stock. What does it mean? The stock holding is more than sufficient. That means they have more. They have more. So they don't need to go and buy it. They have to do what? Replace it. The material currently held at average cost of what? 25. Okay, so he is the average cost, the current value, which is totally wrong. He has used what? The replacement cost of what? 20. So when solving this particular question, don't change anything. Just come here and say 4,000 at what? 20. And I'll give you 8,000 as the first solution. So let's go to the next one. Material beta. A stock of 4,000 units. Stock of 4,000 units. I'll not agree. No. Okay, let's see. A stock of 4,000 units of beta is currently held in stores. Okay, so they have 4,000, but they need what? 400. Okay, they need 400. Perfect. This material is slow moving, and the stock is the residue of a batch bought 10 years ago at a cost of 10 per unit. We don't need this 10 city. Irrelevant. Past cost. Beta currently costs 24 per unit, but resale value is only 18 cedis per unit. Okay. A foreman has pointed out that beta could be used as substitute for another type of what? Regularly used raw material, which costs what? 20. So now tell me, we said that if this material is slow moving and it is a residue, meaning that it's not something they use it often. They don't use regular. So that means if they use regular, they don't need to replace it. So they use replacement cost. They use what? The higher of what? Value in use and NRV. Here, what is the NRV? Say it could be the resale value is what? 18. And then the value is what? 20. So use the 20. So come here and use 20, the higher. So here, this answer should be 420. That's all. Please add material and component to be bought. Don't touch it. That one they didn't provide any news. So that one they say they are going to buy it. Don't forget that those ones you don't have them. You what? The current purchase price. The current purchase price. Good. So this other one, don't touch it. So that's all. We are done with our direct material. Let's go to that labor. That labor. The workforce is paid on time basis. Skilled workers are frequently moved to jobs which do not make proper use of their skills. Okay. The wages included in the cost estimate are for mix of labor which the job ideally requires. It seems likely if the job is obtained, most of 4,400 hours of that labor could be performed by skilled staff receiving 3.35 per hour. So the variable cost is what? 3.5 per hour. So the question is, what will be the relevant cost in here? What will be the relevant cost in here? That is the question. So in short, we are done. Relevant cost for department B will be 8. That's the variable cost. We don't include fixed cost because it is irrelevant. Fixed costs are irrelevant. Only the variable ones. Department profit. Profit is not cash flow. So this is also irrelevant. B per se define relevant costs in context of decision making and give examples to the concept. So take note of that. On that note, this is how far the good Lord will bring us. We'll end here. I will upload this question on the page for you and together with some complicated ones. There's a particular question that I was looking for. I have to make those ones available to you. It's about